Whether you're just starting Forex trading or you're looking to take your Forex trading game to the next level, in this video I'll be comparing two of the most effective Forex trading strategies that majority of the top traders use every day. From short-term gains to long-term growth, I'll be breaking down what actually makes these strategies effective, efficient, and profitable. What's up guys? In case you're new to the channel, I'm mambafx Great, and if you're a returning subscriber, thank you for all of your support. Without any further ado, let's get straight into the video.
What's up guys, welcome back to the chat. So first off, I just want to say thank you guys for 1,000 subscribers. It was an incredible milestone for me. I appreciate you guys, and as you all know guys, we are planning to hit 10,000 subscribers on our YouTube channel by the end of December 2024. That's this year. So please ensure that you subscribe to the channel. Don't forget to like the video, because if you like the video, you're going to be able to the video is going to be able to reach more people. You're going to be able to reach more people, and more people can gain from what you just gained, from more people can learn. Also, if you know that you have people that are interested in trading Forex and you feel that my videos are going to be helpful for them, ensure you share my videos to them, because sharing my videos actually helps them to learn Forex. I do everything free for you guys here on Forex. On YouTube, yeah, I do everything free for you guys. So ensure that you are subscribed, so that whenever I upload future videos, you're going to be made aware of those videos and you're going to gain valuable knowledge just as you're getting from this video. First off, I want to say that I've explained resistance and support. In case you have not watched my support and resistance video, I'll be leaving the link in the description. I'll also be leaving the card above so you can watch that. Also, in case you're wondering what all these lines are on the charts, those are what they call market key levels of support and resistance previously in the market. I've also explained it in my previous videos when I explained how to analyze the Forex charts. I'll be leaving the link in the description. I'll also be leaving the card above. Lastly, in case you're not familiar with supply and demand, I explained it in my last video, or one of my most recent videos. I explained it. I'll be leaving the link of supply and demand video in the description. I'll also be leaving a card above so you can check out supply and demand in case you don't know about it yet. Because in this video, I'm going to just be explaining how you can enter trades, how to understand breakouts and retest strategies, how to trade supply and demand. That's all we're going to be doing for this video. So if you have not learned all what this is about, ensure you go check out my previous videos to learn about supply and demand, support and resistance, and market levels. So one of the most common and frequently used Forex trading strategy by majority of the top traders is a breakout strategy. So what is a breakout strategy? Breakout strategy is simply when we have a previous zone of resistance or a previous zone of support that when price finally breaks and invalidates that previous zone of resistance or a previous zone of support, it breaks out of it and it finally comes back to retest it. So our previous zone of for resistance now, our previous zone of resistance is going to turn as support, while for support, our previous zone of support is going to turn to resistance. So we can see this is an example of a breakout of a resistance zone. So this was previously a resistance zone because you can see price rejection from here. You can also see price rejection here, price rejection here, and finally price was able to break out of this resistance. That was this level. So what can we see that price? When price fully broke out here, it comes back to retest. This is what they call the retest. The breakout, then the retest is a breakout and retest strategy. Price breaks out of our previous resistance here and it comes back to retest it as form of support. So you can see here I wrote it resistance turn support. So price will break a resistance zone, then come back to retest that resistance zone, and the previous resistance zone is going to turn to support. So in case you want to trade, you want to take a trade like this, which is very common in the market, after price has broken out of a resistance, you can actually place your limits, your buy orders, just on the previous resistance that we can see here, because if you can actually look on the left, we can see that we had these two highs right here, these two equal highs right here. If you can see it clearly, we have a one touch here and our second touch here to push price to the upside. So if you want to place the limits on this trade, the best way is always to place it on the form of previous highs. So this was a clear two previous highs. Remember guys, two touches on the line indicates a resistance zone. So this was a very strong resistance zone that price finally broke with this bullish candle. So I would have placed my limits here, and your stop loss, you can always put your stop loss at a low or a high. So since we are buying, we're going to put our stop loss at a low, which is going to be a 24 pip stop loss. It's going to be a very safe stop loss for, because we're expecting that when price comes back to retest our previous resistance zone, which is now support, it will not go below the last low that led to the break of structure to the upside, that led to the breakout. It will not go below the low that led to the breakout of the candle. So I would have put my limit, you would have put your limits here with your stops just below here, and then your take profits should be the nearest high, but in this case, since we already have our market levels marked out, we can just target our market level as our nearest take profit. And as you can see, that was already a 1 to 2 trade. Also guys, I would advise that you actually take trades on higher time frame, because higher time frame support and resistance zones are actually more valid and more strong than lower time frame support and resistance zones. Although why this strategy is very good is because even on lower time frames, even when you're on lower time frames, if you have key levels of support and resistance, it's actually going to hold. It's going to be a valid zone, because this actually this breakout and retest strategy and this previous support or previous resistance on support actually shows in a lot of pairs. It's visible in a lot of pairs. So you just have to go to your own chart, go to your own pair, backtest it yourself, and you're going to see that this is indeed a very common market behavior that happens frequently in the market. And once you're able to understand it fully, you're going to be able to make profit, you're going to be able to gain from it. So like this is an example, this is for a 2-hour trade, a very clean trade. You can see this was the previous resistance right here. I'll break it down once more. This was the previous resistance right here. More resistance were formed in there. Then it finally broke out with this candle. This bullish engulfing candle broke out the previous resistance. Then we had a retest of our previous 2 resistance zones, which were inside the major resistance zone right here. So this was a double top that was broken. So we had our limits placed just on the double top. Then to push price, continue price to the upside. The stop loss, remember, was always going to be below the low that caused the breakout. So that's where we put our stop loss, and our entry was just above the double top, which is our previous resistance or support. And now we can see the trade finally went smoothly and hit our take profits very, very easily right there. And now, just as I explained previous resistance turning support, I'm also going to be explaining previous support zones turning resistance. Now we can see that price was playing just at our weekly level here. We can see our W, which is our weekly zone. Price was playing above it, so we created a form of support because this was the first touch right here, this was the second touch. So we already see this as a very valid form of support. And when price finally broke out of our support zone, which is our breakout, remember guys, we're explaining the breakout strategy, which is a very, very common strategy in Forex. I also explained the one below here, but this is the one above now. So we had a breakout with this bearish engulfing candle breaking out of our support zone, invalidating the support zone. Now what happens whenever a support zone is broken, also it being a key level in the market and price will come back to that support zone, making previous support zone turn to resistance. Now this is, you see it here, I wrote it here, support on resistance. So now our previous support zone, which was right here, which was this zone, market came to retest it with this candle right here. Then the support zone formed resistance to resistance and then pushed price to the downside as a continuation of markets going to the downside. Now if you wanted to enter this trade, very simple, just like before, we have our zone right here. You can go, if you look on the left side, we have these 2 zones here, because if you wanted to take this trade just like before, we have our previous support zone right here, which is this candle. We can see that price has come, this is the first candle, this is the second candle. So this is our previous support zone, our previous short support zone. We can also see our market reacting right here. So after price has fully broken out of the support zone, taking out these lows, if we want to take it as resistance, the next thing we are going to do is that we're going to place our limits just our short position right here, just at that lows, those lows that market finally broke out from. So our limit would have been here, our entry would have been right here, with our stops just above. Because remember guys, this was the last high that led to the push of price, that led to the breakout. This was the last high that led to the breakout of the support. So always put your stop loss above the last high, because if price eventually comes back and take out the last high, then this support turn resistance will be going to be invalid. So just the same way that we did before, if you want to target for our take profits, remember guys, this is going to be the nearest low for our take profits right here. So our take profit would have, our first take profit would have been right here, which is a 3.5 hour trade. Not a bad trade, a very nice trade honestly. Then our second take profit, if we would have aimed something very, very high, if probably we are swinging, if we wanted to swing this, we could actually hold from our previous weekly zone right here to the nearest market level, which is this H4 market level right down here. So holding for this is for swing traders. If you wanted to hold it all the way to the downside, this actually resulted to a 10 hour trade Very, very easy to understand. Just our previous support zone formed resistance, and market just continue to fall to the downside with greater lower lows and lower highs, lower lows and lower highs, and all of that. So this would have been a 10-hour swing trade for swing traders. In case you guys are interested in, I'm personally myself, I don't do swing trading, but in case you wanted to swing trade this, you could have ended up a 10-hour very clean, very successful trade. So there you go. Another example of support and resistance is right here again. We can see this was our first low, our second low. This zone has finally become a valid support zone. Now what happened? When price came to our support zone again, this bearish engulfing candle was what led to the breakout of our previous support zone. And remember guys, whenever our support zone is broken, it turns to resistance. So this was the breakout right here. And once price has broken out of the support zone, we are expecting price to retest it to form support on resistance, then sell to the downside. So what can we see that happened here? If we wanted to enter this trade, the same thing I talked about, guys, remember, we would have taken this line here, and this was our two lows. Remember guys, this was our two lows. That's the close of the candle. This was the two lows that formed support inside here. So when price has finally broken out of this wick and closed below this wick, we know that yes, indeed, that price has broken out truly. So if we wanted to enter this, our short position would have just been here, just as we did before, the same way we did before, guys. So I'm going to delete this. So just as we did before, our short position would have been here. Our stop loss, remember, is always going to be above the high that broke out of the support zone. So it could have been here. We could have just made it a 23 pip stop loss right here. Then what our take profits? First take profit as usual is going to be, our first take profit here as usual is going to be the nearest low, which is this, for a 2RR trade, a 2.2 RR trade, which is not bad at all. Our last take profit is going to be on this nearest key zone, which we have talked about in our previous video, which would have been a 4RR trade. Again guys, another example of resistance turn support breakout strategy. So this was our first candle here, second candle here. This was already formed the form of a legit form of resistance. Now when price came back, we saw the rejection. Knowing this validates that indeed our resistance zone is good. But we can see price finally broke out of our resistance. So once price breaks out of resistance, remember previous resistance turned support. So this was the breakout, this was the retest, and on the retest our resistance here turns support, and then price continues to the upside. So an entry on this trade as usual, very, very easy to spot out entry on the trade in case you guys want to see it. So I'm going to show you, I'm going to zoom in a little bit and I'll show you guys how to spot out entry on this. So this would have been our entry. And why would this level be our entry? You can see from this side that this was the first candle here. They respected the resistance zone and pushed price to the downside. This was also the second candle here. They respected the resistance zone and pushed price to the downside. So these were the two mini resistance inside the overall major resistance. So we would have put our limits on this trade. It's a long position right there. We would have placed our entry here. Then our stops, guys, remember the lows that caused the breakout. So this is going to be our stops is going to be right here for like a 26 pip stop loss, I guess. Yes, a 26 pip stop loss. Now, where is our take profit going to be? First take profit is always going to be the previous high after the breakout, but the nearest take profit zones is going to be this market level right here, which was the H4 market level. A very, very nice, very, very clean market level. So this gives us a 2RR trade and it hit very beautifully. You can see the market's reaction from forming the resistance zone right here to a breakout, to a retest, to a resistance turn support, to the push to the upside to give us our 2RR trade. We saw price reacting to our previous H4 level here, then price came to the downside. Then we can see price finally broke through our previous H4 level, breaking its previous high. So demand zones are basically lows that cause break or stretch to the upside. I've explained it before. And now this inducement is a high or it's a low. In this case, this is a demand inducement or a liquidity. It's a low that has not fully reached our demand zone before going to the upside. So price created a form of liquidity right here, a form of price as in inducement are mainly zones that price will come and invalidate later. So price formed the zone before moving to the upside. So this is a clear sign that a demand zone or a supply zone that actually has an inducement. For a demand zone that has inducement above it is actually classified as a very strong demand zone, while for a supply zone, it is a supply zone that has inducement just below it is actually classified as a very strong supply zone. As you can see, this demand zone had inducement just above it. So when price comes back, with our knowledge on supply and demand, so if we wanted to enter this trade, we would have entered this trade right here. So this would have been our entry right here. Then our stops, as usual, is always going to be on the lows of our supply and demand zone. So this would have been a 16 pip stop loss trade. Then I'll take profit as usual, guys. The nearest lows or the nearest highs that before price retrace. So this would have been our first take profit right here, which is a 4RR trade. A very nice trade right here. If we wanted to aim higher for swing traders, we could have held this all the way to the nearest key level, which was this weekly level here, for a 9RR trade. A very, very beautiful 9RR trade using supply and demand. This was a demand zone, reacting from a demand zone to hit our 9RR trade. Very, very nice, very, very interesting, very, very good setup. Overall, we had already caught enough setup, so we would have caught the first entry here, which was this breakout entry here, and the second entry we would have caught here was a demand entry, a demand order block entry. Now I'm going to explain two more entries here I'm going to explain two more entries here, which are also breakout entries. You guys can see that is a very, very common thing in the market. It's very, very reoccurring. Now, first off, this is our previous resistance. We can see resistance, first touch here, our second touch here to push to the downside. Then price broke out of our resistance zone. Remember, guys, when price breaks out, it comes back for a retest. So our previous resistance now is going to turn support and then continue to the upside. So how would you have taken this entry? How would have taken this trade? After price breaks out of our zone, our previous resistance right here, then our entry would have been just here, because you can see it very clearly. This is the candle. So we can see the taps. You can see price reacted from here, to go to the downside. So our entry right here would have been on this candle very, very easily. Our stop loss, remember, this was the lows that caused the break of structure to the upside. So this would have been a 10 pip stop loss basically. This is a 10 pip stop loss to push price to the upside. So this is a 10 pip stop loss. Then I'll take profit. First take profit always going to be the nearest high that push price, the nearest high after the breakout. So this was the first take profit, which was a 2RR trade. Very, very nice trade actually. Then if you wanted to have held, because there was no other zones, so personally for myself, or you would have, if you wanted to have held to the nearest weekly zone, this is why I don't swing trade. If you're planning to hold all the way to this zone, you can see that price did not reach our weekly zone before retracing to the downside. So right here we can see price only went as high as a 6RR trade. It should have been a 6RR trade. If you have left at 6RR, you could have gotten 6RR from this trade, and price reversed to the downside. So this is why I don't prefer swing trading. I also actually like intraday trading. I just like a very fast trade to enter the same day, close the same day, or to hold a trade for about a day or two maximum. So price did not reach our final take profit here before actually reversing to the downside. So overall, if you wanted to maximize your profit and secure your profits, you could have actually even helped put your stop loss on these highs after price broke out of it, because that's the way I actually like trailing stop losses. So I would have put my stop loss on this high, and after this new candle formed, I could have put my stop loss again on this side somewhere here, then and so on. So overall for me, I could have gotten a 4RR out of this trade total, because I know that this week is definitely going to take me out, because after this low was created, I would have put my stop loss just below these lows right here, and price would have come back eventually to take me out. So I would have gotten out of this trade with a 4RR, which is not a bad risk to reward if you're thinking about it, and with basic resistance, some support, a breakout strategy trading. Now let me explain this last one right here. This last one, we can see that price formed the form of support. How is that? This is the first touch here, second touch here, third touch here. So we know that this zone is a very strong support zone. So we're waiting for price to actually break out. The breakout candle actually occurred at this bearish engulfing candle, which closed below these lows right here. We can see it clearly now, this new bearish engulfing candle. So price failed to hold this support zone after it has reacted from 1, 2, 3. It reacted from the support zone 3 times. They finally broke out of the support zone. So what happens when price breaks out? It comes back to retest support zone as a form of resistance, then it goes to the downside. So if you wanted to trade this, seeing that price has broken out of the previous support zone, we understand that price might eventually trade all the way to the nearest market level here, which is the H4 level. So if I wanted to enter this trade, as usual guys, I would have entered right here. So this was the entry right here, because we can see the market level, market candle close here, market reaction here, and then they push to the downside. So I would have entered right here with this very weak candle here. Then as usual, stops is always going to, for a short position, entering here, the stops is always going to be above the highs or the lows at cost. So I would have increased mine to about 10 pips stop loss here, which is very, very decently, because this was the low that led to the breakout. This was the original low that led to the breakout right there. So I would have even gone as high as here if possible, just to be on the safe side. So this would have been a 17 pips stop loss, or normally if I wanted to go aggressively I could have made a 10 pips stop loss, but to be on the safe side I always go for the higher stop loss, which is actually 17 pips stop loss right here, in case market comes back to do anything it wants to do in here. So take profits is always, as I've marked out my levels, my key levels. I'm going to just hold it to the nearest H4 level, which is right here, and this is actually a 2RR trade, a 2.61 hour trade. Not a bad trade, not a bad setup. You can see that it went very, very smoothly after price came back to retest. Then so it sold all the way to the downside. Even if I wanted to hold below our previous lows right here, I could have held all the way down here too after trailing stop losses on this side. So I'll have held all the way down here, which was a 3RR trade overall. Not bad at all. You guys can see that the resistance and support and breakout strategy actually works very, very well while trading. Just know when to identify your previous support zones or your previous resistance zones, and then set your limits after breakouts has occurred when the retest is coming back. So you guys can see that's a very, very reoccurring thing in the market.
If you ended up gaining valuable knowledge from today's video, don't forget to hit the like button or subscribe to my channel and turn on post notifications. Also, if you want longer videos or you want me to fully dive in and explain this one-on-one, if you want live streams, if you want anything you want, just leave them in the comment section. Guys, remember that we're trying to hit 10,000 subscribers by December of this year, so ensure that you're subscribed to the channel. With that being said, I hope you guys have a lovely, a safe and amazing day. Goodbye, everybody.